Good evening. I would like to frame this video content or context in the spirit of not forecasting at all, but focusing on the process that I go through and why I use that process in this manner. And then you can pick and choose. You can choose whether it fits you 100%, 80%, 50%, or not at all. Um, because I realize that it's very, very difficult to, even for myself, to remove all biases and all scenarios, or let's call it forecasts sometime, okay? And I really want to strip the forecasting part of the process just to show you how I prepare myself and why I do it this way. I made another video that I haven't posted yet, much longer, 50 minutes, something like this. I go at length in the possibilities for Bitcoin or crypto at large, actually. But even in that video, I still realize I go through a process of, without forecasting it, I put a lot of emphasis on different scenarios. So we can call this forecast if we will, but it's not a forecast, because a forecast is I believe that this will happen and I will stick to that. To me, that's a forecast. The forecast, it's going to rain tomorrow, you bring an umbrella and that's it. If it's sunny, it's no big deal. But so I will show you exactly why I work the way I work. And maybe it's going to make more sense when in the midst of everything and we talk. I think it's going to go to 83. I put a number out there. Oh, I think $93,000 is possible, probable. Well, it's just because the band is there. We cross the mid, etc. So it. I just operate from one level to the next. That's all. Okay. It's just I have parameters. I have boundaries that I work with that are based on technicals, market information. You'll never, anyway, okay. And one of the things that I said in the other video, and I'm going to repeat it here anyway, is most people only think and look at the upside because we're all buyers. We all have more pleasure in a bull market. It's easier. And so we think in all season terms. Okay, I'm just using this as a reference, not as a joke, but as a reference, meaning we want our parabolic move. So what I'm going to say is, if you're willing to entertain the most bullish scenario possible, it is your fiduciary duty to think about the worst case scenario. And if you just want to think about a medium term scenario to the upside, then you can focus on just what's the medium term scenario. But you have to balance your view. Otherwise, you're not going to see what needs to be seen. This is how I keep myself as grounded as possible. I'd say I achieve 80, 90% of the time being grounded, but it's always an exercise, a conscious exercise of always looking in both directions. I cannot emphasize this enough, and I'll show you how to. The mental or the mindset is in order to do that. So let's start with the current situation. I'm just going to focus on Bitcoin. That's the master of the crypto market. No matter what else is going on, if Bitcoin is in a bear market, the market is in a bear market, period, regardless of a few exceptions here and there. It's like living with the S&P 500 in a bear market and trying to have a full long portfolio. It's going to be very difficult. You might find a few stocks, a couple, one or two sectors that are doing well in a bear market. That's okay, but you see, it's more difficult. And so I think you've seen enough of me to realize my level of attention to a sector, to a stock, to even a complete asset class, move from hyper attentive to completely detached. And it's because I follow the cycle. And I'm saying this so that in case it can help you. Because for me, everything is energy in the sense that, like everybody else, I have a fixed amount of energy, mental bandwidth that I can spend in a day, in a week, in a month, in a year. So I have to choose carefully where I spend my energies in the market. And once Bitcoin turns negative like this on a weekly, Bitcoin goes from a 0 to 10 scale, 10 being the most attentive buy, with zero interest. I rarely have zero interest, but my level of interest right now in crypto is between 0 and 1. It's 0, really. On the long side. And I'm telling you this not to convince you that this is a religion. Once it's red, it's a bear market. It's never going to go back. No, and it's going it's going to drop 50%. Okay, we're removing all forecasts. This is like you're driving, you're in traffic. If you choose to blow a red light, well, it's not that you can't, but you're increasing your risk substantially. Okay, you can hit somebody, you can get a ticket on a lesser degree of risk, but it's no. You might be able to just drive through, no cops, no cars, and hey, nobody caught me. Okay, or you can just live by the rules to make your life easier. And the rule right now, we're on weekly. For me, this is where I stop. Okay. And so I never, ever wonder during the day, Bitcoin at a $4,000 rally. I don't care. Because I know that this is how I'm going to get trapped and caught in a bear market rally if all time frames are red, and your weekly to determine your level of commitment. Let's call it this way: your level of commitment to be a buyer should drop drastically. Bitcoin should not be a focus of your attention on a day-to-day basis. What level? Where can I buy? No, there is no level. That's the whole point. There are no levels. Levels don't exist. It's a fiction of the mind. When the conditions are not there. The conditions are not there. Period. Because this here, first of all, we flip for 3 weeks, the fake rally, the fake breakout, I should say. And so the red here is the equivalent of the arithmetic. Okay, I've said it several times, but I'm going to keep repeating it for a while. And this is your equivalent of the CVD. You can see the flips are at the same time. Watch the first of all, the colors, the first cross, the second cross, and the third cross. And then the fourth cross would be this one under 50. We're still far. We're still in a long term. Well, this is the weekly. Sorry. Okay. But we broke. okay, here. And in fact, we never came back and the same way as here. It's a real flip. So the issue is right now, I'm working this way. As long as it is like this, the level is irrelevant. Oh, it touched 103. There's support here. I'm buying. Oh, it's 99. Oh, it's 97. Oh, no, it doesn't matter. It could be 60. And if we're still falling like this, I'm not in. See, there is no level. Once you are in a bear trend, let's not even call it a bear market, where we might not be in a full-fledged, it might be just I mean, these are still massive corrections, but we still might be in something like this versus this, okay? But in order to avoid this, I've said this many times in different places in the course, the only way to avoid being caught in a devastating, brutal, grueling bear market that is more than 3 months, like those, it's to not fall for the trap of levels. There are no levels. There's conditions. That's it. You have a red light right now. I like mine that it's yellow. It gives you more hope that it could stop here. Absolutely. Mine is more precise. My whole system is more precise. But there would be, these are just, it's just those are your boundaries. They're not real in the sense of price action. Okay? Just because it's there doesn't mean you buy blindly. They can just, if it's a bear market like this, we're just going to blow through all this. It's meaningless. It becomes meaningful in the full context of everything, not taken in isolation. This is the weekly. Okay. And I wanted to look at let's take an even bigger picture, monthly. You can say, legitimately speaking, that we're still in a long secular bull market because the monthly is still green and it's still green here, same as me, as this one, okay? Like I said, it's almost identical. So how do you frame this for yourself? The way you frame this is you're going to play the long side of the monthly cycle by rebuying the weekly when it goes back green. It's that simple. You don't buy it at 103 because the monthly is, you have to be consistent in your process, in your analysis, in how you use the different time frames. You cannot use a monthly time frame to justify buying a 4-hour bar that is not ready. Okay, you know what I mean? I'm taking an extreme example, but just because if the daily is down, the weekly is down, well, it's just a matter, if those continue down, it's just a matter of time before the monthly goes down. So what is the majority of dominant cycles right now are down, and even the monthly, okay? It's not pretty here. Or we might be still months away from a downturn, unless price crashes so hard. It will happen faster. But you don't want to wait for the monthly to go down because Bitcoin's already going to be at 73, 75, 78. I don't know. Just throwing numbers, okay? But it's going to be much lower. We're already out. We're already taken anyway, okay. We've done our job already. But if you want to remain a long-term Bitcoin maxi, then this is your benchmark. But once this turns red, you go in the same mode of now it's not only weekly cycle correction, we're talking true genuine bear market that's going to last over a year if this turn red. And as you can see, this rise, and in the other video I go over my concern over that rise here. That is the slowest momentum we've seen in the whole history of Bitcoin. And it is, you can see it by this here. So we keep making new highs. Remember, we're not predicting, observing. And every new high has been met by lower and lower and lower momentum, which is caught here, but not enough here, which is why I prefer mine, of course. So we have two major divergences, and the longer one, that's the longest one, but the middle one, if you will, is red, and the fast one is back to green. It try, but it's going to create a kiss here. It's creating a kiss, and if it flips red, then all three levels are going down at the same time on a monthly basis. Okay, I will go back in time in my what I've been telling you so that you can truly capture the essence of what I'm saying. I've said it in different ways many times. You deal with the future by doing the right thing in the present moment. As long as those conditions are like this, you are not, I am not a long-term buy and holder. I'm not a dip buyer. Let's go back to the weekly. I stopped being a blindly buy the dip mode once my weekly turned negative. It's complete. You change your mode of operation. You have to. Otherwise, you're guessing, you're gambling. And the reason, I think I have to insist on why, but I think through your own personal trading investment experience, you've lived through the bad times, to some bad times, and you've seen them, and you've seen cycle come and go and completely disappear off the planet of the earth for 10, 15 years without ever coming back. And I've seen many. So why do you think I have that level of insistence and discipline of not ever being a dip buyer once my weekly turns negative? This is where accident happens. This is where when things start getting bad, they get worse, not better. If we enter into a full-on bear market, risk off for 12, 18 months. See, you don't need to forecast. I don't need to, because it's already telling me I'm going to be in that mode of operation for as long as this lasts. And if the weekly lasts long enough, then it's the monthly that's going to get into trouble. And we're already very close from getting in trouble on the monthly. This is already bad. And so once you're weekly, if you decide, if you choose, that's why I always use the weekly as my long benchmark. This is my modus operandi, okay? This is my religion. I switch mode completely once we turn red. And you're never gonna, I might say numbers in scenario development, but never in a, look, this is where we're going, and I'm not buying until I see $62,577 because it's the perfect Fibonacci number. Okay? You're never ever going to hear me say something like this. I will say, well, the next band level is at 93. So let's work with that first and see how it goes. And that is the proper way of working. That's why you don't need me for targets. You just use your bands. That's all I do. I go from one band to another. And I look at where we're at, if the momentum, I mean, there's nothing positive in this. So, of course, I'm going to target the lower bands and not just the 4 hour band, but the daily, the weekly, and maybe even the monthly band. I look at all possibilities. Okay. The other deep, deep reason why you want, I wish for you to work this way. I will say it in even more dramatic way than this. I said in the other video, maybe some of you have lived, invested, or investing during the 2000 dot-com bubble, but if you have not, you will understand. I don't want you to need to live through the pain of holding things for that long for you to learn that lesson, okay? What goes up comes down. There's no exception, okay? There's nothing safe. Nothing. Gold is not safe. Nothing. Bitcoin is not safe. Nvidia is not safe. That's the first lesson you need to learn as an investor, is that nothing is excluded from being completely destroyed by the market. And in fact, the most beloved things become the most hated. It's a universal market law. So in the concept of not forecasting, I'm not telling you that Bitcoin is going back to $15,000. But I have, again, if you think that Bitcoin is going to $1 million, in your brain is your analytical, right mind, rational investor, you have to look at the other side, which is 10,000 or 15 or 20 or 35. You always have to ask yourself, because you don't know, you have to assume that everything is possible. I've seen so many accidents and so many people believing in this and always narrative based. Okay, yeah, but it's impossible because it's Bitcoin, or because there's only 21 million coin. Well, what if nobody wants those 21 million coin? What if Sailor is it has to liquidate everything? Where do you think Bitcoin's going? It's going to go back to 10,000 if you're lucky. So never ever assume that value in anything is intrinsically will ever be there. Always be there, sorry. You don't know, nobody knows. The only way to protect yourself is to have a systematic approach. So in the concept, the pure intellectual exercise, not about prediction whatsoever. There's no narrative that I'm going to use to justify that it could go to 10,000. It does. The narrative does not matter. It's all about price. It's all about the conditions. So if you want to prepare yourself for $1 million Bitcoin price, you have to prepare yourself for a $10,000 price. No matter what the reason, you don't need any reason. It's your fiduciary duty to be ready for anything. And in order to be ready, you don't buy levels on the way down because you're in love with Bitcoin. Bitcoin doesn't know you love it. If something systemic happen, like I said, the further Bitcoin goes down, the more of those treasury companies will be at risk of liquidation, with strategy being the strongest one. All the new ones are just grifters. So they're going to be the first one to go. putting more pressure and more pressure and more pressure. So this is the reason why I never work with levels. I don't care. I'm not an automatic buyer at 90 because, oh, it's cheap. It's supposed to be cheap and it looks cheap. And so you have to learn, if you want to work this way, you have to learn to let every bounce come and go, okay? You have to learn to not even be attracted. Oh, yeah, Bitcoin bounced for $4,000 from its low today. Yeah, okay. Why do I short? Where's my next shorting level? You're in a downtrend. Completely develop, accelerating downtrend. So the reason I'm making this video is really I'm trying to transfer you my peaceful awareness of what it is dealing with a bear trend, a secular or let's start cycle bear trend, which we don't know if it's going to be just this or this. But does it matter? No, it does not. That's why when you do the right thing at the right time, you don't have to forecast anything because you're already in the right position, in the right direction of the main market. And I'm trying to convey that to you so that you can live for the rest of your life without FOMO. And it's not that FOMO is always will completely go away forever. It's never going to touch you again. Not at all. Is you've developed such a consistent process, such a level of integrity with yourself and a level of confidence in what you're doing that you will be able to keep it at bay. Not erasing it. It's just the feeling is going to get there. It touches 103, it bounces to 107, and you're going to feel a little pinch, maybe, but it's going to go away as soon as it comes in because no, that's it. This is how people get caught. It's buying at 103 today is the equivalent of buying here. So you might be right for 3 hours, 6 hours, a day and a half, it doesn't matter. You are going long in a deteriorating environment, not an improving one. Once you start buying into a deteriorating environment, you are giving your power away to the bears. I'm going to try to conclude this by mixing both levels and conditions. Levels are just benchmark. They're just area of interest where you can look what's going on and change your mind or continue on the same path. If nothing has changed, how do I say this? If nothing changes, nothing changes, period. You should never be, you should never confine yourself to buy at a specific level just because it's a level. And I started the video by saying maybe it's going to apply to you at 100%, maybe it's going to be 80%, maybe it's going to be 50, 0, okay? What would be the reason why you would not want to work this way? The only reason I can see is you truly believe in DCA and you truly believe that Bitcoin will never go down to $10,000 ever because you've decided so. The same way that Microsoft can never, ever, ever drop 60, 70, 80%. Well, it did in 2000. Microsoft dropped 80%. Amazon dropped 80%. I go more at length in the other video. I'm just going to rephrase it quickly here. What you do not know, and that you are not, well, it's not assuming, it's just I'm sure you have not entertained that possibility. It's not prediction. It's accepting that everything is possible. 1 million or 10,000. If you entertain as a professional money manager, they actually work with odds. What are the odds of Bitcoin going to 1 million in the next 5 years? They're going to apply a 5% probability to that, or 10%, whatever. If it's if it's Cathy, she's going to apply a 90% probability to that. If it's Warren Buffett, well, he doesn't manage money anymore. It's going to be zero. And so they go with what would be the return? What is my expectation of the return of bonds for the next 3 years? And for stocks, and for small cap, and for large cap, and for blah, 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 European indexes and Asia. And they build a portfolio based on that. And I can guarantee you that professional billion-dollar fund, they apply a probably a certain probability. It's not zero. I can guarantee it's not zero that they have a bracket for Bitcoin going to zero. What are the chances of Bitcoin going to zero? Because it's still on a long-term scale, it's still a baby asset. It's still unproven by the test of times. I mean, '09, it's not nothing, but in the greater scheme of things, it is nothing. It's a baby. It's a baby asset. So I'm sure that professional portfolio managers that allocate money to Bitcoin have a percentage that says $0 is maybe 1%. But they're going to put it in their model because they know nobody can predict the future with 1% accuracy. That's a retail mindset to never look at the downside, okay? So in your fiduciary capacity to oversee your capital that you want to build a legacy on, you have to treat it in a very respectful manner by allowing all possibilities. And one of the possibility that nobody, I don't know, I've never heard anybody talk about it this way. And the opinion within me that is forming, and again, forget the forecast. It's not a forecast. It might never even, ever even come close. But I know the odds are not 0%. That's my point. Even if it's 5% or 1% or 2% chances that this going to happen, you have to be ready. And one of the bad scenario is, I guess it depends if you've lived through the dot-com bubble or not as an active investor. If you've not, so if you have not, then you don't know nothing. Okay, I can guarantee you don't know what a secular down cycle is. Took 17 years for the Nasdaq to remake a new all-time high. 17, guys. Okay, this is no joke. So, in my opinion, there's a chance that there's a possibility without throwing years like this. In my opinion, I think that's where the crypto market is. Forget the alt season. There's a reason why there's none. We have been in a secular long-term bear market interrupted by waves of euphoria, short waves of euphoria within that creates bear market rallies within a secular, really long-term bear market. Just look at the older coins. There's no all-time high. None. We did it on Ethereum, a couple of hours it lasted, if maybe just a few minutes. We hit, we made a new all-time high and we flop. And for the same reason, for example, Costco took, I think, something like 7 years to remake a new all-time high, so which is much faster than the tech sector. And Cisco was still as to make one, hasn't 25 years later. So some of those coins are never, ever, ever going to see a new light, a new all-time high ever. Okay, there's 10,000 active coins. It's 9,000 too many. Okay, it's that simple. So we are in a cycle of attrition by misery. And I believe now more and more that this is the cycle that crypto at large is in. It's not, most probably not going to last 17 years. I mean, just everything in society moves at a faster and faster pace. So it's not going to take 17 years, but it's already 4, and it might take another 3. So let's put it, or 2 or 1, doesn't matter. But it's the cycle that we're in. It's a cycle of destruction of the useless pile of crap that crypto is. And if you cannot, absolutely, your brain will stop you from listening to this one more second because it's inconceivable to you, then you have fallen in the trap of biases. You're no longer treating your money in a fiduciary manner, accepting and allowing every possibilities that a market could be in. And the reason why the crypto crowd, if all you've known is crypto, then you were born as an investor in a bubble. And you were born in a such closed echo chamber that you assume de facto that it's nothing but up. And not just up a little, up massively. And how has this been working for you for the last 3 years? Not very well. Well, there's a reason for that. Because there's a bigger cycle at work that nobody wants to see. So let's just assume that it's possible. Let's say it's just 5% probability that something like this is going to happen, and that we are in a complete crypto reset. Reset in the sense that this whole space needs a major cleanse. And this is a process we are already in. I'm not creating something that it's not there. It's already there. So what the influencers do is, instead of looking at such a possibility, they keep forcing the other scenario, just the other side, the 1 million Bitcoin or 1 million Bitcoin and 100x in the next 3 months in my coin that you choose. It's all fallacies. It's all based on 3 years of nothingness, basically. Not complete nothingness. I mean, Bitcoin was still fantastic. But this cycle is completely absent of all the characteristic of the previous cycle that everybody is waiting and looking for. And instead, we're gradually, slowly entering into bear market mode. Again, I'm not predicting. Everything could stop right here and kick off again, and we just enter into a small pocket like this, and we're starting again. I don't know that, but right now it's not there. It's not here. So I'm not going to jump the gun and pretend that I know. If instead it's something like this, so what if it's a global crypto reset to reset the the degen mindset that is plagued by this industry. So the natural question would be, yeah, but what if this happened? Where do you think it's going to go? What can I buy? Then you miss the whole point of what I'm trying to tell you. Bonds and Bitcoin can't go back to 35,000. Why not? You don't know that. I don't know that. But if we're in a period like this, I'm not going to fight it and I'm just going to wait for it to end. If it's 76, 67, 58, 46, 35, 22, 15, I don't care. I will not go on a buying binge if it's something like this. If it like it could be possible. I don't know. Okay, I don't know. If we do something like this and we have another buy signal, then okay, I'll go along. Whether it's 86 or 93 or 97, it doesn't matter to me. Because remember, you buy the green. You buy for the green. That is why, and I'm not the only one saying this, I'm just repeating what I've learned from pros. Losers focus on losers, and winners focus on the winners. Buying on the cheap is the greatest illusion and fallacy that's going to destroy you. Because, for example, you started deploying all your cash starting at 99 because it's below 100. Okay? And then every $3,000 you buy. Well, by the time it goes to 35, you're completely out of cash, and now you're so deep in shit that the thing is, and it's because I've said that often, maybe not here, but everybody's a bull until the shit hits the fan. Okay? No, sorry. Everybody is a hodler or a buy and hold or a CDA until shit hits the fan. Pain is pain. Losing money is painful to everybody. Nobody is immune to a portfolio that is dropping month after month after month for 18 months in a row. Okay? Nobody's immune to that. So there's a difference between what people think they can do on paper versus what they can really do in real life with money on the line. Okay? So do not overestimate your capacity to hold through pain. I can almost guarantee you that it's not going to be as strong as you think it is. I've seen the misery of people living through 2000 bear market, okay? While I was in cash. Since you cannot put zero probability to the scenario I've just told you, then, in my opinion, it's your fiduciary duty to not put yourself in harm's way if it happens. Because the more I think about it, I mean, for me, it's getting clearer and clearer now by the week, by the month of this whole cycle from 22, well, 23, in fact, the bottom, but 22 the top, is we really are in a cycle of annihilation of the speculative manias. They're lesser and lesser, they're smaller, they're in less and less coins, less and less sectors. Even the meme cycle was very fast, and it's completely dying. I don't know if I've posted that video, but we basically had three cycles. We had the cycle of Bitcoin dominance, we had 4 months of Ethereum dominance, and we're going to have a 2, if lucky, 3 months of privacy dominance. And that one's going to die too, okay? The world hasn't changed. It's just the speculation is narrower and narrower. Oh, it's privacy. Okay, let's all go into privacy. Nothing else is working. So all the money is flowing. All the money is flowing is in silver and gold stock, and all the money is going into lithium, and all the money is going to AI stocks. I'm not a mega bear, okay? In conclusion, I look at all possibilities. This is how I don't get caught, because I don't assume anything. I don't assume that it should and could and will absolutely stop at 93 to $93,266, okay? I don't have a target like this. If things look good at that level, yes, I'm going to be a buyer. If they don't, I'm not. I'm going to wait for the next level, and the next level, and the next level. I never bought anything all the way down. 2000, I never bought those stocks until years later, because there were other things that were rising. So hopefully, my goal with this is to try to help you distance yourself from the habit of working with predetermined notions, predetermined scenarios, predetermined that don't change. Again, mental heuristic, they will kill you. You cannot use heuristic to trade and invest. Mental shortcuts.